Hey, welcome everyone. It is the Jerome Powell party pooper moment. I'm telling you right now, a lot of crazy stuff. We had some good things happening in our newsletter advisory service. We trailed Hess. If you follow the tweets, then you know we bought Hess. We just trailed the stop. It had an incredible day. I wish I'd been able to pick the high and would have gotten out at 67 and change. But this was a pretty good overall day for us here. And considering the fact that GE long from $10, we bought a put yesterday to protect it. And you know what? It's funnier than hell. GE in this whole Fed move is only at 1051. So what are my thoughts? Well, for starters, we got a really huge insight in VXX, and the market just blasted off, which is pretty good actually. I'd like to see that volatility pop. And I think that overall, what I see in the market, friends, is this was a shake, rattle, and roll correction. It's end of the month. I don't think the bull market's over. We get a little bit of maybe a day or so of reprieve. It's the end of the month, but I do want to make mention the Algos strategy for you guys that have been interested in the Algo optimizer. This means it went short. Currently, we're only actually in one trade right now. It just cleaned the books on everything. The British pound, you can see it went long and got out, and it went lower. It's not in a trade. Gold had a couple really good trades today. Gold didn't really do anything since with Jerome Powell. I mean, I guess you want to say it's down $10, but in relative terms, since Jerome Powell, relative to the S&P 500, gold's not doing anything, because that's the real story, the S&P 500. And this was the big trade here for the Algo optimizer. It just absolutely, and as we pointed out in the live trading room this morning, it went short this morning right in front of us. That was the profit target once. It missed it, so it did work and gave back a bunch of profits. Didn't really make us feel warm and fuzzy, but before the Fed it went short. Here's the stop loss. It got out of half its position, and then like magic, unfortunately, it did trail the stop and got back and gave back a lot of the profits. But keep in mind, this is a 15-minute model. I mean, not many times have we seen the market go from 30.14 to 29.57 in literally 2 bars. I mean, that's about on average what we did. So what's moving the market right now? Where do we go from here? I'm personally in the camp that we are going to probably, let's take a look at our advanced decline and give you what I see happening right now. First, it is approximately 3:15. We got 45 minutes. There's a big support zone, and let me just bring this to a full screen for you. All right. So what I see is that first and foremost, we will generate not just a low close doji, or excuse me, a PPS sell signal. This is the signal right there that's warning us we could close on a generated algo sell signal. That's what the PPS indicator is. Many of you get this already if you're on, again, Thinkorswim. That's the same indicator. Stochastics, divergence. Volume indicator is divergent. The breadth of the market is, I mean, putrid. Here, we have 109 stocks right now at exactly 3:15 in the afternoon. Market closes at 4 now. 3:15, we are 109 breadth, which means we had another deterioration in advanced decline. On balance volume pointing down. So what does that mean? Buy the dip? Not right now. I mean, we might see a little bit more downside. And what I wrote about in this week's thoughts and observations, if we close less than this line in the sand, it improves the odds with deteriorating internals, such as the breadth of the market, and deteriorating with heavier volume. It pretty much gives us an insight that we could, in August or in the near term, try to come back near this zone here, 290, or even worse. So therefore, this is not one that you want to be buying the dip right now. We're going to need, this did some technical damage today. There's going to be some people that got really racked in the market here. This was a big down day in the marketplace. One of the things that I do see that's encouraging is that the small cap sector started to see an increase, and you can see right now we finally got an advanced decline reading that was more supportive towards small cap stocks. One problem, take a look at these two other indicators. One is on balance volume, this one right here, And this is my volume proprietary indicator only for our TradeStation lifetime users. Now, what this shows is extreme divergence. So I think all of this was, while granted we did get upside in the breadth, what was the positive effect of the breadth? We had small cap energy stocks go up today. We had regional banks go up. So that has a big component weighting of those two, and a little bit of biotech. So thanks to earnings on Amgen, we saw some upside in some of the biotech names. But everything else, friends, not doing well. So this is one we want to give not a lot of, even though we don't have a sell signal, I'm not chasing the Russell right now by any stretch of the imagination. So I just wanted to give you fair warning that today, if we close in the next 45 minutes, now keep in mind that's going to be kind of hard to do, considering the fact this market was able to move literally 20 points in 5 minutes. So where can it go in 40 minutes? That's a good question, right? But I can say that we would get a momentum reversal with negative volume and negative breadth readings, and we would get sell signals in. Let's review. First, the SPY, sell signal. Next, Q's, sell signal. Dow's already been in a sell signal last couple days. The NYSE, sell signal. NASDAQ Composite, sell signal. And it's just as I pointed out a second ago, we don't have the actual sell signal here in the Russell yet. So I can't really sell short the Russell because there is no sell signal. And quite frankly, I don't know where we're going to close in the next 15 minutes, or let alone the next 40 minutes. But I can tell you this, if we do get a sell signal, it doesn't mean we're going to crash and it's the end of the world. It means we could see a little bit more maybe back and fill in the marketplace, which means two-sided trading. We still have a lot of earnings to get through for the rest of the week. We still have the monthly unemployment report, and we still have President Trump, despite the fact that the trade negotiation may not have seemed to gone well, maybe that was a ruse to get the Fed to do action to lower the rates, and now he can come back and say, guess what, guys, we got a partial deal with China, and we're back off to the races. So I'm not a big fan of trusting the market here by selling short, but then again, I want to be very selective, and until we get better clarity in the marketplace, I think it's best to wait, and I'll update you what the indicators are suggesting for right now. And in the S&Ps right now, we're bouncing all over the place. We were just at 87, we're back to 92, and it is a fluttering there, so to speak. So I look at a couple of items that I thought we would see further weakness. V&Q, we should see REITs getting down a little bit harder. Looking at the Russell, you know, the irony is the Russell's only down. They could actually turn positive at the end of the day. And so now that Jerome Powell's done talking, this is also maybe particular end of month squaring. So don't get too bearish down here in the marketplace. Wait for the smoke to clear, and let's see how these indicators turn out towards the end of the day. Because quite frankly, this might not even close below that line in the sand. This could actually turn around. And what would that present? Just maybe a trading range type of an environment. And that's what I see at best. Thanks for watching. Again, don't get short here. Look for maybe more buying opportunity. And I think possibly we want to look for buying opportunity in some industrials. We want to look for some buying opportunity, quite frankly, in the small cap. I want to look for some buying opportunities. Something we haven't discussed ever is the mid cap, MDY. Take a look at that chart. In fact, I'll do it for you real quick if I can. Might be hard. Hold on. All right, here we go. Here's the little mid cap, 60-minute mid cap, S&P mid cap. Now, the momentum came down, and look what it did. It held right at a person's pivot major support. So I'm going to change this over to a daily chart. Check this out, friends. So where's the sell signal in the mid cap? It's the same thing. More importantly, here's another interesting aspect. While it took out the lows, it snapped all the way back. This is an outside trading range. Volume's not that bad looking, to be honest with you. Stochastics over the next couple days, maybe back and forth. Mid caps. This is the underperforming sector a lot of people haven't really noticed or taken notice of, and I think we could see a strong shot of a breakout in the coming weeks and months ahead. So small cap, mid cap sector is something we want to be focused in on moving forward. Thanks for watching, and I will update you as to the developments of the overall market here. And, we'll take a look at how this market closes. And then, again, we'll share with you some of our scans that populated and what sectors and what stocks are generating good monthly buy signals, and in what sectors generated monthly sell signals. Thanks for watching.